So, Paul, I've got a number of questions I want to ask you. So let's get straight into our hot seat and go through our interview. Is that okay?
Yeah, sure.
Yeah, awesome. Paul, where are you from, and what do you actually do for a living?
Yeah, I'm from Perth, and as a profession, I'm a civil engineer. But 3 years ago, I had the opportunity to take redundancy. So I thought, why not having an early retirement? So I accepted it, and that's actually sort of been very good, because it's sort of been helping me in terms of being able to put a bit more time aside and doing something different. And I've always had some interest, or had some interest in the share market for a while, but it just because of lack of time and knowledge, I suppose, I haven't really sort of been able to sort of progress very much in that regard. At the moment, I'm sort of, after a couple of years, I decided to go back and do some casual work. So I'm sort of doing some consulting work on a casual basis as well, but still giving me plenty of time to, I suppose, spend doing things which I had some interest and opportunity to be able to do it now.
Right. And I mean, you said you're a civil engineer, so do you think your engineering background has got something to do with, being trying to, I guess, being able to really just follow the system to a T? Would that be right?
Yeah, I suppose in engineering, I suppose you have to be fairly systematic, I suppose, in what you do, and it certainly has helped. Not saying that, I mean, it's sort of pretty much, I suppose, well, in a sense, it sort of helped in terms of making sure, that you sort of like stick to a certain system. And and with freedom trading, I suppose it's really, I mean, that's one thing that I sort of lacked before, was a system to actually help me in terms of my trading. And obviously, Freedom Trader sort of has given me a system now, and enable me to actually follow a certain system.
Yeah. And then I know I already mentioned that you were one of my very first students. So in actual fact, how long have you been with me in the Freedom Trader Blueprint, and what's your experience been so far, Paul?
I think it's been, well, not I think, it is over 2 years now. From what I can recall, I started back in April 2016. And what the course has sort of provided me is, as I said before, is a system that sort of helped me. And the system, I don't know whether I heard that from you or someone else before, is that really you have, the way you trade really have to suit your personality. And I'm a very low risk investor. I don't like to take a lot of risk, and I suppose your system sort of really fits that trade, I suppose, where I'm not taking a lot of risk. I've actually sort of been, before I started your course, I actually had a look at one of the option trading as well. And obviously with leverage and all that, it's a very high risk type of investing. And I was never comfortable with it. So I started, but I never really comfortable with really sort of like putting too much money into it. I started very small, and because it's obviously doesn't suit my personality. I'm a very low risk investor, and I suppose freedom trading is what it has helped me as well, is that I was able to actually see like those weekly videos are very helpful in terms of me able to understand and follow it for a while before I start investing. I mean, at the start, that's why after 2 years, I'm still building my portfolio even after 2 years, because like I want to make sure that what I'm doing, I really understand what I'm doing, and also being comfortable in terms of what I can expect as an outcome. So really the system really has been helping me, and those weekly coaching as well has been excellent, because it's a constant reminder for me, so that if I'm deviating a bit away from the system, I'm getting reminded, so I can put things in place to get me back on track before it gets too late. So that's been brilliant, and the support I've been receiving from you as well. I mean, I suppose I don't know whether you still recall, but early in the piece, I sort of we didn't have the Facebook and all that, and yes. I sort of like more or less sending you emails and all that. So the support has been fantastic, and that's really has helped me in terms of my confidence in I suppose going out and start trading.
Yeah. No, it's actually awesome, because obviously being with me all the way from literally almost the very beginning, you've obviously seen the evolution of both Blueprint as well as Inner Circle, because like you said, we didn't have the Facebook, we didn't have other channels of support besides the email, so it was very in its infancy when you started, but we still got through it. And the main thing is that you've been able to do whatever you need to do, but still get the results anyway, even without all the tools that we have today, right?
Yeah, that's right. I mean, certainly, I suppose the Inner Circle community has been really good on the Facebook. I'm probably feeling a bit guilty that I don't actually participate that much.
That's okay.
But it's been really good, because I'll be honest, I'm still learning a lot. And there are a few members who are very active and very willing to share. So it's a very great community that we have.
Yeah. What I might do, Paul, is I'm going to bring on board your spreadsheet, actually the latest. So thank you for that. Paul did send me his spreadsheet, but because we had a delay of the hot seat until July, Paul just basically updated his spreadsheet to the latest July figures for both Australia and the United States. So I'm going to bring up one by one. So I'll bring up the Australian Stock Exchange. So this is something that we've actually never seen, because most of our members are, of course, they're trading the US stock market. But having Paul also send me this is what really excited me, because it just shows how, it really doesn't matter, because these rules, no matter where you go around the world, these rules, if you follow the system to the T, it can be applied literally anywhere, from Japanese stocks to British stocks to basically European stocks to even Asian stocks. It really doesn't matter. But of course, Paul being Australia, Western Australia, he's also very focused on the Australian market. So here is his completed investments on the ASX basically till July, and you can see here how the date that we look at when he began was into back in the late basically mid or May 2016, and it's very good that he's been able to keep extremely good records over time. And if I'm just looking at some of the the ResMeds, Flight Centres, ANZ, Woolworths, Telstra, Coca-Cola, QBE, etc., you will notice a lot of these very common names since we're in Australia anyway, and just seeing how he's been able to apply and get the returns on these type of stocks. So ROI is sitting on just having a glance through them. I'm just seeing from the 4%, 11%. Once in a while, the -7%, and then from time to time, big ones 19, 37, 20%, And also please cast your eye also on the number of days as well that he is spending on these stocks to get these type of returns. And even in ones that Paul was spending longer periods of time, say 264 days, it really doesn't matter, because in the end, even generating a 13.4% capital gain over a year is quite extraordinary, even though you're holding that for that period of time. And if I look at some of the small, I guess, losses that Paul was able, did make during the time, minus on TVG, -1 here. So there are definitely also losses as well. So it's definitely not all profits. But then these really don't matter, because with the losses here and there, when you comes to the profit wise, you see all these double digit figures. They just easily cover them. And I think I'm just looking at the biggest one, Blue Glass, something I've actually even myself never heard of it. This is looking at the 9 days. Paul, this was an extremely incredible one, 41% in 9 days, 1600% annualized. That was a very an extremely very happy return, I'd say, right?
Yeah, I mean, this one is more like a speculative one, if you like, which sort of works out really well.
Yeah.
I think, as I said, I'm more like a very low risk sort of type of person, but I do sort of like on occasion, if I see, I mean, my portfolio, well, in terms of the speculative one, it's a very low percentage.
Right.
But that one really worked well.
Yeah, it worked really well. Yeah, I've actually never seen one of these like this before. This is like in the vicinity of an option trade of a 9 day. So without leverage, this is actually quite extraordinary. But if I'm going down and just going, all the way down, I'm looking at all these, and just it's actually very incredible. And what I did was I did summarize your figures. So please add anything that I say as well, Paul.
Yeah, sure.
So on average, sitting at 9.6%. So I did an average of Paul's both wins and losses at 9.6. In total, 65 Australian investments or trades made. 57 of them were correct or winners, sitting at just above 87%. Annualized at just above 100%, and sitting on 74 days on average. So about 2.5 months on average per investment or per trade. So in terms of result-wise, awesome. Really extremely proud of you, Paul, that you've been able to just utilize Blueprint and use that on the Australian market and get these type of results. So Paul, have you got anything you want to add on top of what I've actually said about your results?
Yeah, in terms of the Australian market, as I said, because I mean, I like to actually sort of like make sure that I understand the system, and then before I start trading. I mean, that's the reason why at the start I was doing mainly Australian stocks, because that's the ones that I sort of more familiar with. But from last year, sort of, I suppose from July of last year, that's when I started on the Australian, the US stock market, and I think now I'm sort of like more transitioning into the US market, because I think, well, obviously the US market is a lot bigger, and I'm getting to understand a lot more. That's why I think I was saying that through the Blueprint, in Inner Circle, I've learned a lot about, the US market, and understand a lot more about all the different companies. I'll be honest, I mean, like, even Wells Fargo, I never knew that they sort of like equivalent to go off back. So that's why, initially I never sort of like, and I didn't want to really start investing in the US market until, I suppose a full year after I sort of been with the Blueprint.
And that is totally okay, because a lot of our students also, of course, we're, our home country being Australia, a lot of us are uncomfortable, getting out of the Australian market. But wherever we are really in the end we're comfortable, we can stay there, and it's really good to finally see you transitioning across as well. And you know, there's no in terms of percentage wise, you know, there's no right or wrong answer of, you know, how much should you put in the Australian market versus how much you should put in the US market. In the end, everybody's different, and I think it's just depending on your comfort level. And if you're comfortable putting more, eventually putting more in the American market, then so be it. But if not, you know, the results are showing that it really doesn't matter, because these type of results, whichever market, who cares? You're getting the results that you want financially.
Yep.
So now I'm going to bring up Paul's US figures as well, just to show you. So like Paul said, he started on with the US market literally a year later, once he got comfortable with the Australian and what he was doing on the Australian side. So now you'll see, you know, familiar names that we are seeing or we are doing ourselves, from the Crafts to the Mercs, BlackBerry, Qualcomm, you know, etc., etc. So those ones are in Paul's universe right now. And if I look at the return on investment that he's making, in terms of double digit, I'm not seeing as in terms of gain wise, definitely not as high as the Australian side. But however, it does look like if he keeps on going like this, there will be probably more of these even smaller gains over time. So if I'm just scrolling down, so far with the US market, it's only been basically a year now, since mid 2017. So averaging wise, just below 7%, so slightly lower than the Australian side. Total investments 50, wins at 47, and win rate sitting at 94%. Annualized at 62%, and average holding just short of or just above the 2 month, but slightly shorter time period than the Australian market. So therefore, result wise, I mean, we you know, of course, there's a bigger number of results on the Australian side compared to the US side, but I think this is going to catch up over time. But overall, however, results definitely awesome on the win rate, and just needs to keep on going with this type of you know, the results. So Paul, if I was to ask you, Australian, US, how are you? You know, how do you see things, and how are you feeling towards, you know, what you've been able to achieve with the Australian side and the US side?
Yeah, I think Australian side was, I suppose it was quite good in 2016 when I sort of like started, because that's when I think some of the investment in ANZ and some of the banks, you know, was quite good, and also I suppose that was a time when the mining start sort of or was not 2016. I think it was probably a little bit later when you know, I mean, there was like the mining as well. I mean, I think that sort of starts to gain a bit of more momentum, I suppose. And then we've got the likes of like Flight Centre. I mean, Flight Centre sort of did pretty well, I suppose, more recently as well. But so there was, and it was a time when we had the Brexit as well. I mean, there was Brexit was that July 2016?
Yeah,
somewhere around there.
Yep.
Yeah, so I actually sort of like probably started at the right time. And also as you can see, like the Fortescue medal as well. I mean, that was more like 2017. Yeah, so you know, I mean, at the time, you know, I mean, they were quite good, and also I think there was a few like RCG. I've been sort of following like RCG as well. I mean, I think they've changed their name now. And RCG was doing quite well, so I've sort of picked up quite a few good stock at the time. And Galaxy as well, I sort of did pick up a few Galaxy, which sort of did quite well. So like even Amazing, I was sort of looking at it. I mean, it sort of went backward, sort of more recently.
Yeah.
but amazing as well. I sort of got like 25%, well, 26%.
Yeah.
So it was probably, I would say the time was probably a bit better than beginning of 2018. But saying that, I suppose, like, you know, on Facebook, I saw that, you know, I mean, quite a few sort of doing quite well in 2018 as well. So, yeah, I'm not too sure.
Yeah. No, it's actually really awesome. Yeah, it's good to hear, you know, from your point of view of how you see, you know, the Australian market versus US, and it's a good point what you mentioned about the Australian market in the 2016, 2017, the resources and a number of that, you know, the sectors actually did quite well, especially the banks as well. Versus now, you know, the banks are in the doldrums where, you know, it's actually quite hard to eke out a profit on the Australian market versus a couple of years ago compared to now. So you sort of transitioning to the US market is sort of, you know, in a way a good smart move as well, because you're now obviously with the going out from a harder market to a slightly, I wouldn't say it's an easier market, but a much bigger market and a number of opportunity wise for you to actually profit from. And this is going to only, I think this is only the start for the US market for you.
Yep.
So yeah, no, thank you, Paul. Actually, I just want to get a sense of, you know, you guys have just seen Paul's results. What's your thoughts on Paul's results so far? Especially, you know, that he's actually sort of conquered both markets, the Australian market as well as the US market. Tony's got fabulous work, Paul, both Australian and US. A great example of the long-term benefit of following the blueprint system. Navid's got amazing. Chris has got well done, man, super impressive. Yeah, Shaz also fabulous results. Louise, does he use stocks or investment style? Paul, just a quick question on these ones. You're more of a longer term investing without the stocks, is that right?
Yes. I'm sort of, unless there are sort of like opportunity for trades, I certainly sort of more thinking of the long term, because I sort of like over those couple of years, I can see that in the long term investing, I mean, even though sometimes your entry might not be quite right, I mean, it goes down, I can hold it for a lot longer, and I've seen quite a few of the stock that I had. If I hold it long enough, it will go back to, you know, I mean, to where it was, and even higher than that.
Yeah.
So if I hold it long enough, I'll be able to sort of like have a win. So that's why, as I said, because I'm the low risk sort of investor. So I would rather have it longer term than just. I mean, I do sort of sell if the opportunity is there. If let's say I see that, you know, I've made like over 10%, you know, and all the indicators or that I can sell, then I would sell. I would definitely sell. But when I put my money, it'd be more like, hey, if I have to wait for the longer term, I will. Yeah.
No, thank you, Paul, for that. Yeah, because Barry actually said, good to hear, because Paul's philosophy is exactly the same as mine as well. So it's actually a good, I guess, message to a lot of people that's on the line. So, and then a lot of messages for, just to let you know, a lot of messages is basically saying, you know, awesome results. So Nessie's awesome results, Penny, great results. Gail's got, you know, gives you faith in the Australian stocks as well. Mark's got something to aspire to. Brad's got just great work, Paul. Morris, well done. Paul's been able to apply the system to another exchange and reproduce blueprint type results. Linda's got awesome effort with the Australian and US market, great win rate since 2016. Maggie's also, Land's got motivation from seeing Paul's results. Thanks, Paul, for sharing. So, Paul, you're actually just inspiring a lot of our members as well, which is so good to see.
Yeah. Thank you, everyone.
Yeah, Toshi's just got a quick, I guess, a question. You know, where's the column in terms of number of shares? Toshi, the reason why I deleted that is I wanted to also protect every time you'll see that when I interview our hot seat people, I want to make sure that I also protect the privacy in terms of, you know, the account size of individual people I interview. This is privacy reasons, and I don't want to put them in a bad position. So that hence why I sort of deleted the dollar sign, and we really should focus on the results. So no matter how big your portfolio, I mean Brad, for example, our last time we had a hot seat, with a small portfolio it still works. And I showed you also my sister's portfolio, which is small as well. So it really does not matter. It's not the size portfolio. It's what it is it's you starting and then scaling up. And I do know Paul's numbers, and he has scaled up, from where he was to where it is now. So Paul, can I just get a confirmation that when you started on a small size, and now you've scaled up and you're still scaling up? Would that be right?
Yeah, that's correct. I mean, from first year to second year, I started quite small, and I'm probably about 2.5 times in the second year compared to the first year. Yeah. No, that's great to know. What would your I'm just gonna get out the results now. Well, what would your typical day look like now? Knowing, of course, we utilize the system. How much time do you actually spend doing what you do with your portfolio? I probably, when I first started, I'll probably spend a lot of time initially, because obviously the system was new, and like the American market was quite new to me, but I would say more recently, in the morning, because I do Australian stock as well, in the morning I would sort of just check what happened, because I'm in Perth, so I sort of just check in terms of what happened to the US market, and sort of just check my portfolio for the US market, and then I actually have a look at the Australian market in the morning, and then I suppose I actually try it at the open. So really that night time I'll probably put some time aside as well. I would say that in terms of checking portfolio and trying to work out what I would sell or buy, I would say probably roughly about an hour in the morning and an hour at night.
Okay.
But I suppose the photo that you showed earlier, I'm probably quite relaxed these days. and sometimes, if I just have a look and let's say for the US market or Australian market, if I find that most of the stock that's on my portfolio, they're all going up, then I don't worry about checking whether I should. Well, obviously I wouldn't sell if it's going up, so I wouldn't worry about that too much, unless I've got something that I'm on my watch list to buy. Then I'll just call it a day. I'll probably spend, I don't know, sort of like half an hour, and that'll be it. So it all depends on what happened on the day, how the market is moving.
Yeah. Okay. Yeah, that's good to know. Yeah. So it's Paul's following what we've been saying, that it depends on how much in the end, how much time you actually want to spend. So for some of us, we might spend half an hour to 45 minutes a day, and for some of us, we're going for that 1-2 hours a mark. But it's definitely not basically sitting in front of a screen all day long, looking for headlines and news and that sort of thing. So there's no need for that to get these type of results. So it's almost a hands-on but hands-off approach as well.
Yeah, I suppose I probably spend a bit more time because I don't have an automated system in a sense. I do everything sort of like manually, because, well, from what I can gather, others are sort of like got more like an automated system where automatically just pull out all the data from Yahoo or wherever. But I mean, for me, I'm still sort of like check the stock one by one. So it probably takes me a bit more time.
Yeah, got it. Yeah, I mean, it really, yeah, it doesn't matter. I mean, and actually, you know, the funny thing is, I believe that if, for those who, sometimes when you automate it too much, you end up missing out on things. Whereas if you're sort of, you know, spending that extra time, but one by one, in actual fact, you're probably getting more out of it, because then you are now doing proper research versus some, you know, versus scans where you just like, sometimes you do make mistakes going automated as well. Yeah, awesome. Thank you for that, Paul. Paul, there's a couple of questions that I've been asked. So basically, based on what they're seeing, so I might just ask them to you, and if you can just answer them.
Yeah, sure.
So David's asked, you know, what does Paul use for RSI, STO, and smart money for the ASX? And I think that was asked by Trisha as well.
Oh, the RSI and STO, I use the same for buying and selling as you know, what we've been taught from Blueprint. In terms of smart money, unfortunately, I haven't been able to sort of like work out. I mean, I'm with ComSec, so they've got a list of shareholders, but I don't think it really sort of, because most of the ones you can see, a lot of them are professional investors, like the fund managers and all that. So really, but if you look at my list, I mean, it's all the really companies that's probably, well, most of them are in the ASX 200, like the ANZ, Fortescue Metal, and Flight Centre. So I just go for those companies. I mean, I'll have one or two of probably, which I mentioned were speculative ones. I mean, those ones, they were a bit tricky, not tricky, but I've noticed that like the one that you show, Terry, on the blue glass one, which I made like 40% odd. Yes. I mean, that one there, I've actually, I was sort of reading, I suppose I was reading an article, and I found that they're the one who actually sort of like, it's attached to one of the university, I think it's University of Queensland, if I remember rightly. Like they're doing a lot of R&D in terms of like the LEDs and all that sort of thing. I mean, like for TVs. I mean, I don't know, I can't recall all the details, but and I find that, oh yeah, that's an interesting technology, and I actually follow the stock. I mean, it's a cheap stock. I mean, it's like it was like 20 odd cents. I think I bought it, at 24 cents, and I saw that. I mean, the volume is not there, so sometimes it's tricky when you don't have the volume. Right. The volume is not there, but the price tends to. I mean, it's varies quite a lot. So that's, I've sort of followed it for like a few months, and I saw that, you know, I mean, when it gets down, it goes up fairly quickly. Right. And it can go up by, you know, like from 24 cents. I mean, it goes up. It went up by 10 cents in like 2 weeks, or less than 2 weeks. So I've been following that stock for like a few months, and I thought, oh well, look, I'll just take a punt and see what happened, and it worked out quite well.
Mm-hmm. Worked out very well. Yeah, I mean, you're right, Paul. With the Australian market, there's definitely no smart money, which is why I like the US market a lot more, because the Australian market, there's none of that stringent rules where, you know, after 10 days, a fund manager, for example, that manages more than 100 million must let the market know of their position if it's more than 5%. So the US market, in some instances, is actually far more transparent than the Australian market, and the Australian market really does show only in the annual report top 20 shareholders, which a lot of them. These fund managers, they even hold, they hide behind what they call nominee companies as well, custodians. So we don't even know who, in actual fact, owns these companies. So it's all very hidden, and hence why the American market definitely has more data. So for those who are asking Paul about, you know, what the RSI STO, he is using the same rules as Blueprint, but from his answer, from what he said, is he pretty much is using ComSec to get those numbers, as well as from the financials as well as the chart itself. Would that be right, Paul?
Yes, that's correct. Yeah, I mean all the financials I actually get from ComSec and the RSI and STO as well. I use ComSec.
Yeah.
And then
so
I double check in IB as well.
Right, got it.
Yeah,
got it. Yeah. So it's these numbers are freely available on pretty much all broking platforms. So there's nothing technically special about these numbers. There's no need to pay for them. So they are free numbers, and it's just a matter of you knowing how to use them. That's the main thing. So it's good to see Paul's results from using simple data, but with a totally different broker than us. So Paul, can I ask, what's been, I guess, the impact and outcome that Blueprint and Inner Circle that you see is providing towards your financial future now?
I suppose I actually, after I've done Blueprint and Inner Circle, I actually have a lot more confidence in a sense in going forward. So as I said, I've sort of been scaling up, and I still have a little bit more to go to scale up as well, and that certainly has given me a lot more confidence to do that. And previously I've actually sort of bought a few shares, I mean not a lot, sort of like through one of the financial planner that I was sort of using, and every time, I mean, it's like every time I have to go back to them and ask them, well, what do you think whether I should sell or buy? And I find that I didn't have any control over what I was doing, I mean, so now I've got full control. I mean, if I want to buy, I can buy. And sometimes when I actually advise them to sell, I mean, it's probably a day or two later, whereas now, if I want to sell it today, I'll just go and sell it. So I've got more control, if you want. And also the other thing is understanding the position sizing as well. So even though, I mean, I've made losses on a few, overall my portfolio is going up. So that's sort of as I said, I'm a lot more confident in even investing, even if I'm not 100% sure that it will actually sort of make me money.
Right.
Because the position sizing, I mean, I'm only sort of like putting 1 or 2%, even that 1 or 2% sort of go down by 50%. I mean, it doesn't really sort of make a big impact on the whole of my portfolio. And also the exposure in the US market as well. I mean, I can see, I mean, it's a huge market sort of compared to the Australian one. And there's a lot more volume than the Australian market, because like I said, some of the Australian market, or a few that I've been following, I mean, there's just not the volume there, and when you want to sell, you might not really be able to sell it at the right price.
Yes.
So that's obviously, there's that benefit there of going into a much bigger market.
Yeah.
So I would say those are the the benefit that I've got out of Blueprint and Inner Circle.
Oh, that's awesome. That's really, really good to hear, Paul. And I mean, this is probably, I probably know the answer to this, but would you recommend others join Blueprint and continue their Inner Circle journey?
Oh yeah, definitely. Definitely. I mean, it's I mean, I suppose like what you did this morning, the SQA.
Oh yeah, the system.
Yeah, it's sort of like proving that the system is working, or the system works. I suppose it's like, even for me when I first started, I mean, I still, even though, I mean, I was sort of I can see that there's a system there which I didn't have, I mean, after 2 years, I can definitely say that the system works, and it's proven. So I'm confident, that it's a system that works. Definitely, if someone, I suppose, someone sort of like interested in finding, a system that works, then yeah, I mean, definitely I would recommend Blueprint to them.
Yeah, no, thank you, Paul. I mean, you definitely got to be very proud. I mean, 2 years and your long-term performance, sitting at 94% on the US market, being 1 year, and then on the 2 year side with the US Australian market at almost 90 or 80, I think it was 87%. You definitely, you've definitely been able to utilize the system to its capacity. So it's really good to see. Yeah, and Paul, in terms of what being on this journey with me now for you've been one of the longest serving students with us. So during your journey throughout the last 2 years, what's been one or two takeaway lessons and actions that you can share with our group?
Well, I think obviously patience is one thing which it really has been something that I sort of keep reminding myself, and pretty much just follow the system. I mean, I sort of got to a stage where I was at the point where I thinking maybe it's better for me not to check how much, how should I say that? Not how much, I mean, it's probably better for me not to check how much I've gained in terms of percentage or loss, but just sort of look at the RSI and STO and make my decision based on that. Because like sometimes when you look at at how much you've gained, probably, I mean, it's gone up by 10% or whatever, then you sort of like probably be tempted to sell.
Yeah.
Or if you've lost like 10%, you might be thinking, that's where the emotion sort of comes into play. Whereas if you just look at the system, forget about how much it's, the stock is worth, and you just look at the system and say, well, look, it's showing me to buy, then I just go and buy. It's showing me that it's time to sell, just go and sell. I think I'm sort of like, if you want, over those 2 years, I'm sort of like trying to understand that a lot better and trying to, like I know the last few, I purposely didn't go to my spreadsheet and sort of just look at the RSI and SDO. And I was not quite sure whether I've made any losses or made any win on a particular trade. And I just look at the system, and so to me, it's more like follow the system and be patient.
Yeah. So hopefully you've been able to get that. So what Paul just in summary is patience, of course. Nextly, following up the system, and I think something for us all to take away was which is really good even for myself, to not look at the return, the dollar amount or the percentage of amount that you've made on that one particular investment or trade, but then just purely look at nothing but the RSI, STO. So there's literally zero emotional attachment to whatever outcome. So it's just purely following the system, and you're able to then make a decision very cleanly without any baggage, so to speak, on the buying side as well as the selling side. So that's actually a very good takeaway. So thank you, Paul, for that share.
That's it.
Yeah, Paul, just finally, anything you want to ask me at all?
Not really, not anything that I can think of.
Okay. Anytime, whenever there's something, always let me know. So I just want to say thank you, Paul. It's been a pleasure to have you on board, and I really do believe your results, as well as just your I guess your humbleness about your results does truly inspire the group. We've got about just over 60 people on the line, so everyone's basically giving a lot of good feedback, just letting tons of good feedback on our hot seat interview that we've had tonight.
Yeah, and thanks a lot, Terry, as I said, for for all your help and the support that I've received over the last 2 years. I suppose, as I said, sort of like initially there was a lot more of emails through to you, but certainly, thanks a lot for that. I think that sort of really, in a sense, giving me that confidence that what I'm doing was in the right direction.
No, it's awesome. No, it's been a great even journey for me too, Paul. To have you on board as one of our first students, and just seeing you progress along the way over the past 2 years. And of course, you've probably seen me progress on my teaching style as well over the last 2 years, because this is all new to me on the mentoring side. So investing, I'm pretty good at because I've done it for so long. On the teaching side, you've probably seen me progress over time with my webinars, sort of hopefully getting better and better at it. So it's good to see.
Yeah, no, it's all going very well.
Yeah, no, thanks, Paul. So, Paul, I'll just quickly read up a lot of your, these are just comments coming through. So Michael's just saying, that's great. Hope to achieve the same. Penny's saying, thank you, Paul, well done. Barry's got congrats for the interview and takeaways. Tony's got great work, Paul. I love to listen to your comments. Kurt, well done, Paul. Kim's got humble man with great advice. Thanks, Paul. Navid, thanks, Paul, for sharing insights and results. And just a ton of thank yous coming through. So thank you, Paul.
Yeah, thanks, everyone.
Cool.